Hey, it's Clay Trader, and this will be a video chart on ticker symbol DCIX. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think that's a good job of quote unquote telling the story of the price. And then in this situation, make summarizing the price pretty straightforward. And that would be pump and dump on thin ice. Now, before you start throwing stones at me, I'm not saying pump and dump in the sense of this is some company being run out of somebody's shed. I'm just saying it based on how the price has acted. And my definition of a pump and dump is that a price makes a really nice move, and then within a relatively short amount of time, the price goes back to where it started, or in some cases lower. So let's first just define where all this started. And in my opinion, it all started when the price broke out. Broke out from what? Well, if you look back here through the history of the chart, you can see that right around this 80-cent mark was just a massive thorn in the side of the bulls. I mean, they tried to break above there, couldn't do it. Tried again over here, couldn't quite do it. But then did finally get the break there, and you can see the rest is history. So that is what I'm defining as the starting point. So let's go ahead and apply the definition. Price makes a really nice move. Well, considering it started right there and the price went as high as right there, I think we'd all agree that was a very nice move. Second part, within a relatively short amount of time. Considering this all happened in the same day, again, I would assume that we can all agree that, okay, yeah, this was a relatively short amount of time. The price goes back to where it started, or in some cases lower. Now, this is where the thin ice comes into play, and thin ice is at 80 cents. Why is that the case? Well, to be fair to the bulls, the price could do something like this, where it could come down here, walk along that thin ice, and then start to head back upwards. And in that case, again, like I said, to be fair to the bulls, you would have a set of lows right there. This set of lows would be right there. You picture these as stair steps. Okay, fine. The bulls are now starting to construct stair steps in the upwards direction. However, on the flip side of things, if the price comes down here and it tries to walk along that thin ice, and then all of a sudden it cracks and the price just separates to the downside, what do you have in this situation? You literally have the price right back below where it all started, right back inside of that same range. And that would be the epitome of a pump and dump. So is 80 cents going to hold? Your guess is as good as mine, but there sure is a lot of downwards pressure right now. But anyway you slice it, 80 cents is without a doubt that thin ice point. Maybe the bulls can maintain above it and build that higher stair step, but without question, 80 cents, very important level going forward. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.